Welcome to Griffonomics.
It's great to be here.
I was looking at the market this morning, and it struck me that we have this weird cognitive dissonance when we talk about infrastructure. If I bring up infrastructure at a dinner party, people's eyes immediately glaze over. They think concrete, steel, you know, roads, bridges.
Boring stuff.
Exactly, the widows and orphans stocks. Safe, slow, maybe a little dusty. But today we are doing a deep dive into a company that is technically an infrastructure play. I mean, it owns thousands of steel poles.
Right.
But it is currently trying to pull off one of the most interesting magic tricks in the entire market.
It really is a fascinating transformation. You have a company that's historically viewed as, what, a utility? Essentially a landlord.
Yeah, a landlord.
And now it is aggressively pivoting to position itself at the dead center of the AI revolution.
We are talking about American Tower Corporation, ticker symbol AMT. And the mission for this deep dive is pretty specific. We need to investigate whether this transformation is, real.
Or if it's just buzzword marketing.
Exactly. We need to understand how a real estate investment trust, or REIT, ends up talking about GPU as a service and neural networks.
That's the tension right there. You have the legacy business, the steel towers, which pays the bills.
Sure.
And then you have this new high-growth engine they're trying to bolt onto it.
It's like finding out your reliable, boring accountant is actually a high-tech DJ on the weekends. So, let's strip this down to the studs. Before we get to the sexy AI stuff, we have to talk about the empire they've already built.
We do.
Because the scale here is honestly hard to wrap your head around.
It is massive. American Tower operates over 149,000 communication sites globally.
149,000? That is a lot of steel.
It is. And the business model, what we call vertical real estate, is arguably one of the best business models ever invented.
Let's unpack that, because vertical real estate sounds fancy, but it's actually pretty simple, right?
It's incredibly simple. They own the tower and the land. They build the steel structure once. Then they lease vertical space on that tower to wireless carriers.
Verizon, T-Mobile.
All of them. AT&T and their international equivalents. And these aren't month-to-month apartment leases.
Yeah.
These are non-cancelable long-term contracts, usually with built-in rent escalators.
So once the tower is up, it's basically just a cash machine?
Precisely. But the real magic, the aha moment for investors, is the operating leverage.
Operating leverage.
Think about it this way. The cost to maintain a steel tower is virtually fixed.
Right.
It doesn't cost much to keep it standing there, maybe some paint, some lawn mowing. So when they sign the first tenant, that covers the construction and the maintenance. The return is okay. But when they bolt a second tenant onto that same steel structure,
the costs don't really go up.
barely at all,
Right.
but the revenue doubles. And if they add a third tenant, that revenue is almost pure profit margin falling straight to the bottom line.
Okay, so that's the golden goose. But here's the skepticism I hear from people, and honestly, I feel it too sometimes. We've been hearing about 5G for years. I have the 5G icon on my phone right now. It feels like the build-out is done. Haven't we built all the towers we need? Are we just collecting rent now?
That is the most common misconception. If you look at the data, specifically regarding the G cycle, we're really just in the, let's call it the messy middle of 5G.
Really? Because my phone says 5G, but half the time it still feels like LTE.
That's exactly the point.
Yeah.
You have coverage, which means the icon is there. But the next phase, and this is the phase American Tower is banking on right now, is densification.
Densification? That sounds like urban planning.
It's physics. As we move to higher speeds and as data consumption explodes with things like 4K video and augmented reality, the carriers are using mid-band spectrum.
Okay.
These radio waves carry a ton of data, but they don't travel as far as the old signals.
So they can't just have one tower every 10 miles anymore.
Exactly. They need to put more equipment on existing towers to handle the traffic load. The management explicitly talks about carriers needing to put more stuff on towers.
So it's not about building new towers everywhere. It's about making the existing ones denser with equipment.
That's it.
And looking even further down the road, I mean, are we allowed to talk about 6G yet? Or is that too sci-fi?
We have to talk about it because the roadmap is already set. The 6G standards are scheduled for release in 2029.
2029, that's right around the corner in infrastructure years.
It is. And commercial deployment usually follows shortly after. So just as the carriers finish spending all this money on 5G densification, boom, the starting gun fires for 6G.
And it just starts all over again.
It guarantees a multi-decade runway where carriers are forced to constantly upgrade.
Forced.
Effectively, yes. If they don't upgrade, their network falls behind. And the government is actually
Right.
paving the way for this. You might have heard about the Big Beautiful Bill.
Is that the actual legislative name?
It's the nickname, but it refers to the legislative push to identify and clear spectrum in the 6 to 7 gigahertz band, specifically for 6G.
So the government is clearing the highway, and American Tower owns the toll booths.
That's a great analogy. They also have a services segment that actually helps the carriers install this stuff.
Oh, right.
It's not their biggest revenue driver, but it keeps them sticky. They help with zoning, permitting, the actual construction work.
Okay, so the legacy business is healthy. It's a forced upgrade model. Stable, defensive. But that's not why we're here.
Right.
We're here because about 3.5 years ago, American Tower did something that confused a lot of people. They bought a company called CoreSite.
This was the strategic inflection point.
At the time, people thought, okay, they're buying some data centers, nice diversification. But looking at the numbers from late 2025 and heading into 2026, we see what this really was.
It was an ecosystem play.
Data centers now make up about 10% of their total business. But listen to this growth divergence. That segment is outperforming the legacy business significantly.
By a lot.
We're seeing data center property revenue growing at 14% year over year.
Compared to what, about 8% for organic international tower growth?
So the side hustle is growing almost twice as fast as the main job. Why? What is driving that 14% number?
2 letters. AI.
Okay, let's connect the dots. Because when I think of AI, I think of software. I think of chatbots. I don't think of a REIT.
You have to think about the plumbing. AI doesn't exist in the ether, it lives on servers. And there are 2 stages to AI.
Right.
There's training, which happens in massive server farms, usually in the middle of nowhere where power is cheap. Think Des Moines or the desert.
Right, the hyperscale stuff.
But then there's inference.
Inference.
Inference is when the AI is actually doing the work, when you ask it a question and it answers. When a self-driving car sees a pedestrian and it decides to brake, that is inference.
Ah.
And for inference to work, specifically for things like automation and real-time decision-making, you cannot have latency.
You can't wait 200 milliseconds for the signal to travel across the country and back.
Exactly. Speed is everything. You need the compute power to be close to the user. This is what the industry calls the edge. And this is where American Tower's hybrid model becomes brilliant.
Because they own the real estate closest to the user.
Correct. They are positioning their CoreSite data centers to support AI-ready interconnection. They are offering GPU as a service.
GPU as a service. That sounds incredibly futuristic.
It essentially means they provide the infrastructure where companies can rent the massive computing power needed for AI workloads without building their own facilities. And the market for this is it's exploding.
How big?
The global AI data center market is projected to grow at a 28% compound annual growth rate between 2025 and 2030.
28% a year. That is wild. That's not utility growth. That's tech startup growth.
It is. And American Tower is trying to physically bridge the gap between the tower and the data center. They're actually running an experiment in Raleigh, North Carolina right now that I find fascinating.
I read about this. They built a small facility right at the base of a cell tower, didn't they?
Yes. It's an edge facility, literally connecting the wireless signal from the tower directly into a mini data center sitting at the base.
Wow.
It's testing the thesis that in the future, the cloud won't be in the sky. It'll be at the bottom of the cell tower down the street.
So the data never hits the wider internet. It just goes phone to tower to server and back.
Instantaneously. If that model works, every single one of their 149,000 tower sites becomes potential real estate for a mini supercomputer.
That is the AI infrastructure mode.
That's it.
That is a massive vision. But, and there is always a but in these deep dives, vision costs money.
It does.
You don't build 149,000 towers and buy data center companies without spending some serious cash. We need to look at the checkbook.
The balance sheet is the sobering part of the story.
We have upcoming catalysts. The Q4 and full year 2025 results are dropping on February 24th, 2026. But the number everyone is staring at is the debt.
The debt elephant.
How big is the elephant?
It's big.
Yeah.
American Tower is managing a debt load of approximately $37.2 billion in long-term obligations.
$37.2 billion. Ouch.
In a low interest rate world, that's fine. That's how you grow. But in the high interest rate environment we've been navigating, it's a headwind.
Sure is.
Interest payments eat into the profits that should be going to shareholders. They have been working to de-lever or pay that down, but it's a slow process.
So with that much debt, how are they deciding to spend their money? They clearly can't just go on a shopping spree.
They've had to be very disciplined with their capital allocation framework. If you look at their priorities for 2025 and 2026, priority 1 is the dividend.
The first obligation.
That's what they call it. Subject to board approval, they anticipate allocating about $3.2 billion just to dividend payments in 2025.
Wow.
This is crucial because a lot of their investor base is there for that income. They are income-focused investors.
So they pay the shareholders first. What's second?
Internal CapEx. They're spending about $1.7 billion on internal improvements. And this is interesting. They aren't aggressively buying new portfolios of towers right now. They're spending money to upgrade the ones they have.
Why? If scale is the game, why stop buying?
Returns. Management has been very clear that spending money to add capacity to an existing tower drives a much better return on investment than going out and buying a new tower in a new market.
So it's the difference between renovating your basement to rent it out versus buying a whole new house with a new mortgage.
That's a great way to think about it. Maximize what you already own.
And speaking of where they operate, they've also made a geographical shift, haven't they?
They have. This is part of their risk management.
Yeah.
They are moving away from aggressive M&A in emerging markets.
It's like Africa, Latin America.
Right. And focusing on developed markets.
Yeah.
Europe, the U.S., specifically places like Germany, Spain, France.
Why the pullback?
Well, emerging markets offer high growth, but they come with currency risks, political instability, operational headaches.
Right.
American Tower seems to be saying, we'll take the slightly lower growth of Germany or Spain if it means the check actually clears and the currency is stable.
Speaking of checks clearing, we have to talk about the drama. Every good story has a villain, or at least a conflict. And in the American Tower story, that conflict has a name. D.
The D-Sure problem, yes.
So for those who don't follow the daily soap opera of the telecom world, what is going on here?
Well, Dish Wireless, which is owned by EchoStar, is a major tenant. They signed a big agreement with American Tower back in 2021.
Okay.
But recently, DSH sent a letter claiming they were excused from their rent obligations on a strategic co-location agreement because of a spectrum sale.
Wait, excuse me, I sold my car, so I don't think I need to pay for my parking spot anymore.
Essentially, yes.
Uh-huh.
And American Tower obviously disagreed. They filed a declaratory judgment action, a lawsuit, to confirm that, yes, DHH still owes the rent.
How much money are we talking about? Is this going to sink the ship?
No, it won't sink the ship. It represents about 2% of American Tower's global revenue.
Okay.
In the U.S., it's about 4%.
Okay, so not fatal, but 4% of U.S. revenue is an annoyance you don't want.
It's a headache. And it highlights the risk of tenant concentration. When you only have a few major customers, Verizon, T-Mobile, AT&T, DISH, if one of them gets a cold, you sneeze.
And speaking of sneezing, we're still dealing with the sniffles from the T-Mobile and Sprint merger, right?
We are, but the worst is over. We call this churn. When T-Mobile and Sprint merged, they had redundant sites.
Right, they didn't need two towers on the same street corner.
Exactly, so they canceled leases. That's been a drag on American Tower's growth numbers for a couple of years.
But there's a light at the end of the tunnel.
Yes. The Sprint churn, as they call it, is largely finished as of late 2025. So as we look at the 2026 numbers, that headwind should be dissipating.
So that clears up the financial picture a bit.
Significantly.
So let's pull this all together. We've got the massive legacy business, the exciting AI growth, the debt load, and the tenant drama. When you put this all into the blender, what comes out? What is the final verdict on American Tower right now?
The synthesis here leads to what I call the dual engine thesis.
Okay, lay it out.
Engine 1 is stability. That's the towers. Despite the maturity of the market, the cash flows are utility-like. They are defensive.
Right.
Even in a recession, people don't cancel their phone plans. Carriers can't tear down their equipment. That income is protected, and it pays that dividend.
And Engine 2.
Engine 2 is growth. That's the data center pivot. That is the exposure to the AI revolution. If you believe that AI usage is going to grow, and the projection of 28% AGR suggests it will, American Tower has positioned itself to capture that value, not just as a landlord, but as a critical infrastructure partner.
It's like buying a steady utility company that also happens to own a stake in the next gold rush.
That's a great way to put it. There's a summary sentiment from the analysis that I think hits the nail on the head. Risk defined, portfolio protected.
Okay.
It's a play for the patient, income-focused investor who wants exposure to the plumbing of the AI revolution without betting on which specific AI software company will win.
Because whether it's OpenAI or Google or some startup we haven't heard of yet, they all need a place to live. And they all need low latency.
Exactly.
So what does this all mean for you? It means that when you drive past that cell tower disguised as a pine tree on your way to work, you might need to look at it differently.
You should.
It's not just handling your phone call anymore.
That's right. And this raises a really provocative thought to leave you with.
Let's hear it.
We spent the last 20 years thinking of the cloud as this centralized thing. Big server farms. But as AI moves from training to inference, as it moves to our phones, our glasses, our cars, the processing has to move with
The
it.
cloud has to come down to earth.
Exactly. So is the cell tower of the future actually a cell tower? Or is it a mini supercomputer? If every tower becomes a data center, the line between telecom and tech disappears completely. American Tower isn't just pivoting, they are redefining what a tower is.
And if they pull that off, that steel pole is going to be worth a whole lot more than just the scrap metal.
Absolutely.
That is a lot to think about. We hope this deep dive helped you see the signal through the noise.
Thanks for listening.
We'll catch you on the next one.